All right.
Welcome, Amir. Thank you for joining us again. For all the viewers out there today, Omair and his team broke news that CMHC has retracted a previous policy. And so what we're trying to do today is to understand, Omair, what policies retracted, when did it come into force and effect? And then what does that mean for us today? Where does that put us as far as we're concerned and for consumers?
Fair enough. Thank you so much for having me on, Ricky. I really appreciate that. You're absolutely right. CMHC just made an announcement. So let's talk about that. Let's unpack that a little bit. So back in July of 2020, I'm sure you remember it, CMHC put out some bold predictions that were pretty much ridiculed by everybody in the real estate circle, right? And those predictions were, of course, that the real estate market could go down by 17%. Obviously, that did not happen. It was the absolute reverse that happened, right? Our market, I think, appreciated over 15 to 16%. Some places more, some places was like 30%. I don't know. But what didn't happen was the market did not take a hit. So around that time, CMHC was being led by their CEO at that time. His name was Evan Siddell, and Evan is a very conservative person. He does not like over leveraging on debt, on properties, or anything like that, right? And that was one of his mandates, was to see how he can control the overall indebtedness of Canadians. So in July 2020, CMHC made some significant changes. And the main, obviously, change was that they reduced the income to debt ratio qualification for mortgages. So in Canada, mortgages are qualified based on income to debt. What it means is that the banks look at what percentage of your gross income goes towards your debt, which includes housing. And the benchmark was that no more than 39% of your gross monthly income should go towards your housing expenses, which is your mortgage payment, property taxes, heating. No more than 39%. And no more than 44% of your income should be going towards your total debts, like your credit cards, line of credit, student loans, all of that included. So CMHC came back in July 2020 and said, no, this is too much. Let's scale this back. And they scaled it back from 39% to 35%. And total debt ratios, they scaled back from 44% to 42%. So there was definitely a reduction, and they restricted further borrowing for clients. Remember, this gross debt ratios and total debt ratios of 35-42 already take into account the stress test. So it's not really 35% gross debt ratios where 35% of your income is going towards your housing. It's actually way less when you factor in the stress test. And the other big change that they made, which was mind-boggling to me, you've always had to have good credit in Canada to get a mortgage. It's plain and simple. If you want to get a mortgage, you have to have good credit. But CMHC went way further than that. So before, it was you needed a minimum credit score of 620 to qualify for a mortgage. CMHC changed that to 680. So now you don't just need good credit to qualify for a mortgage, you need impeccable credit to qualify for a mortgage, right? So CMHC thought that these changes will get adopted universally by the banks and by the other insurance companies. Unfortunately, that did not happen. So the finance minister did not make this a requirement. OFSI did not pick it up. And the other insurance companies, because CMHC is not alone, there's Genworth, which is now called Sagen, and then there's Canada Guarantee. Both of those companies said that no, we're not going to adopt this change because we don't think this change is needed. So guess what happened? CMHC used to be the biggest insurance company for mortgages in Canada, Crown owned, right? CMHC is a Crown corporation. They did the most amount of housing insurance policies. Guess what? They went from number 1 all the way down to number 3 because all the banks started using Genworth and Canada Guarantee. Now, at this point, something even more controversial happened. Mr. Evan Siddell, the then president of CMHC, he wrote an open letter to the banking institutions and to all the CEOs of the banks. And basically that open letter said, hey, don't use Genworth and Canada Guarantee, continue sending us the business and adopt the guidelines that we've set out, because this is prudent underwriting, right? Banks didn't see it that way, and they continued using, Genworth and Canada Guarantee. Well, fast forward 1 year from now, CMHC has lost a significant amount of market share. They've, like I said, they're in the third place now, and they also have a new president, which is Romy Bowers. And the new president has come in, and the first change that she's made, the first major change that she's made, is that they're going back to the July 2020 guidelines. So the income to debt ratios are going back to 39-44, and the minimum credit score is going down to 600. So this is fantastic. It may seem inconsequential because there were already other mortgage insurance companies that were doing this business, but it's still good news. It's good news because it shows you that CMHC feels bullish about our economy. It also shows that they're confident in the amount of debt that Canadians are taking on, and they're confident of the housing market. So they're open to taking on more of a market share. So it's definitely good news, and it's a step in the right direction.
Fantastic. We love the optimism as well. And so, Omair, when is this policy going to take force in effect, or is it something that's already been applied now?
Well, officially, I believe that. Yeah, I believe they put in a date for next week. However, even if you submit an application as of today, CMHC will underwrite it with the new guidelines. Honestly, it doesn't really matter because Genworth and Canada Guarantee have always been doing it anyway, so it's still somewhat inconsequential, right? But officially, I believe it comes in on the 13th.
Fantastic. That's great news. If any of our listeners have any questions, feel free to reach out to myself or Amir. We're happy to help you guys further, and happy buying and selling. It's a strong, healthy real estate market. And, it's good to get many opinions in this marketplace to see what's actually going on, to understand your individual circumstances. We'll see you again on the next one. Bye for now.
Take care.